Greetings to you, our listeners at StockExplorers. Today, we're diving deep into Hims and Hers Health, Inc.
That's right. They're a company making some serious noise in telehealth. Been around since, what, 2017?
Exactly. And they've really carved out a niche with that direct-to-consumer model.
Yeah. Starting with things people maybe didn't want to talk about openly, but they've branched out a lot since then.
They really have. And the scale is, well, it's impressive. We're talking over 2.2 million subscribers by 2024.
And hitting $1.5 billion in annual revenue. That's substantial.
It absolutely is. So our goal today is to really unpack their business, look at what makes them tick, and, figure out the key points for you if you're considering this as an investment.
Sounds good. And I think the obvious starting point is the big news recently, that deal to sell Wegovy.
Yes, let's jump right into that. So they've partnered with Novo Nordisk. They're going to offer Wegovy, the FDA-approved semaglutide, on their platform. This feels like a pretty big deal.
Oh, it's definitely significant. And the way they're packaging it is interesting, too. It's $599 a month.
Okay, $599. What does that include?
Well, it's not just the drug. They're bundling in 2147 clinical support, nutrition advice, plus all the regular membership perks.
That's quite a step up from their previous strategy, right? Weren't they doing compounded GLP-1s for much less?
Yeah, compounded semaglutide was like $199 a month. And you've got competitors like Ro offering Wegovy itself for, I think, around $499.
So a bit pricier. What's the thinking there? Is it about moving away from the compounded versions?
I think that's a huge part of it. The FDA has been looking much more closely at compounded drugs. Plus, there are always questions about supply consistency.
Ah, okay. So partnering with Novo Nordisk for the real deal, FDA-approved Wegovy, solves that.
Exactly. They get guaranteed supply of all the doses directly from the manufacturer. That adds a layer of, well, legitimacy and stability.
And the market seemed to like it. I saw the stock jumped pretty significantly on the news.
It really did. Somewhere in the 34 to 40% range, depending on when you looked. That's a strong signal of investor confidence for sure.
No kidding. But what about that price point, $599? Could that maybe turn away some people who are attracted by the lower cost of the compounded options?
That's definitely a question. It's a trade-off, right? You pay more, but you're getting the branded FDA-approved drug with guaranteed supply and this whole support package.
So the value proposition is different. It's less about lowest cost, more about credibility and comprehensive care.
Precisely. And that credibility boost, aligning with Novo Nordisk and the FDA-approved standard, that's probably quite valuable for building trust.
Yeah, I can see that. And moving towards these approved drugs, it feels like it sets them up better for the future, maybe navigating regulations more easily.
Absolutely. It aligns them much more clearly with established regulatory pathways. And, it could potentially make it easier for them to expand into other chronic disease areas down the line.
Right, because they'd already have the framework for handling these kinds of treatments.
Exactly. They're building that infrastructure and expertise.
Okay, and how does this fit into the wider competitive picture? We know Novo Nordisk is working with multiple platforms, and Eli Lilly has its own strategy.
It's a busy space, but Hims and Hers seems to be differentiating itself not just on access, but on that integrated care plan.
The 24/7 support, the nutrition guidance.
Yeah, it's not just, here's your prescription. It's presented as a more complete health management program, which might appeal to certain consumers more than just a basic fulfillment service.
Okay, interesting. So let's zoom out a bit from Wegovy and talk about the Hims and Hers business more broadly. Can you remind us of the core model?
Sure. At its heart, it's a subscription telehealth platform. People pay a monthly or annual fee.
And that gives them access to doctors' prescriptions.
Exactly. Access to providers through the platform, and then they handle the prescriptions, often shipping them directly.
Got it. And you mentioned the average subscriber was generating decent revenue?
Yeah, back in 2024, the figure was around $73 per subscriber per month. And because they handle so much in-house,
Yeah.
the consults, their own pharmacy network, the shipping, they're quite vertically integrated.
Which usually helps with costs and efficiency, right?
It certainly can, yeah. Cuts out some middlemen.
And they have those distinct brands, Hims and Hers.
Right. Hims targeting men, mostly 25-45. Hers for women in a similar range, though the weight loss services are broader, targeting all genders now.
Can you give us a few examples of what they actually offer, beyond weight loss now?
Sure. So for Hims, think sexual health ED meds like sildenafil, tadalafil, often way cheaper than retail. For Hers, things like flibanserin.
Okay.
Then there's dermatology customized skincare plans after an online consult. Mental health, too, they offer group therapy, access to SSRIs.
Those are common antidepressants, right?
That's right, selective serotonin reuptake inhibitors. And then the weight management piece, we discussed Wegovy now, but also Zepbound, Mounjaro, sometimes Ozempic off-label, compounded semaglutide still for some needs, generic liraglutide,
Yep.
even oral med kits and protein stuff.
Wow, that's a pretty wide range of services under one roof.
It is. And they use their own tech to manage it all. Proprietary EHR system, using AI for personalization, trying to tailor treatment plans.
Technology is clearly a big part of it. What about regulations? Telehealth has faced some scrutiny.
Yeah, it's always a factor. They follow state telemedicine rules, use licensed providers, get informed consent, especially for controlled substances. There was some noise around marketing compounded drugs, like a Super Bowl ad, but they seem focused on compliance.
Okay, let's shift gears to the financials then. 2024 sounded like a banner year.
It really was. $1.5 billion in revenue, like we said. That's up a massive 69% year over year.
And a lot of that was the weight loss boom.
A huge chunk of it, yeah. Subscribers also jumped 45% to that 2.2 million mark. And importantly, they flipped to profitability. Net income of $126 million after a loss the previous year.
That's a significant turnaround, but I thought I saw something about margins coming down a bit.
You did. Gross margin in Q4 2024 dipped to 77%, down from 83% the year before.
Okay, why was that?
Mostly strategic pricing on the GLP-1s.
Mm-hmm.
They basically subsidized them a bit to really drive subscriber growth in that category.
Sacrificing some margin for market share and growth makes sense.
Yeah, but even with that, their free cash flow just exploded.
Oh.
At $198 million for the year. That's up 322% from 2023. Shows the pharmacy operations are getting really efficient as they scale.
Wow, okay. So historically, what allowed them to have such good margins before this GLP-1 push?
Several things. That direct-to-consumer model helps a lot. Subscription revenue is predictable. Their product mix, especially in things like sexual health and hair loss, often involved high-value perception but relatively lower-cost treatments.
And the vertical integration you mentioned.
That too. Controlling more of the chain. Plus, they've been pretty efficient with their marketing spend over time.
So looking ahead now, what are the forecasts for growth? Sounded pretty strong.
Very strong. For 2025, they're guiding for $2.3 to $2.4 billion in revenue. That's another, 56% to 63% jump?
Huge. And Q1 guidance was even higher.
Yeah, Q1 2025 guidance was something like 87% to 94% year-over-year growth. Analysts are thinking maybe around 20% average annual growth after that. Still very solid.
Okay. What about the bottom line? Earnings, profits?
Also looking good. Projections are for earnings growth around 21.8% annually over the next 3 years. EPS growth maybe around 19.9% per year.
And EBITDA.
Adjusted EBITDA for 2025 is forecast between $270 and $320 million. They expect free cash flow and net income to keep rising too, with a strong projected return on equity.
So the growth story looks set to continue, potentially hitting over $3 billion in revenue by...
Some longer-term projections see them potentially reaching, maybe $3.35 billion by 2027.
Okay. What's really driving all this subscriber growth? It's not just one thing, I assume.
No, it's a mix. Their marketing is definitely aggressive and, pretty innovative sometimes. Gets the brand out there.
And the subscription model itself helps keep people around.
Absolutely. It encourages recurring use, and their retention rates are apparently quite high, over 80% annually, they say.
Wow.
Plus, as they add more services, like weight loss or mental health, existing customers might start using them for multiple things. Cross-selling potential.
And the whole digital experience probably clicks with younger people.
For sure. It's convenient, user-friendly, digital-first. That resonates. Plus, the pricing is generally transparent and often cheaper than traditional routes.
Right. And the tech, the AI personalization you mentioned?
Yeah, they call some of it MedMatch. The idea is using data to improve outcomes, make treatments more effective, which ideally keeps people happier and subscribe longer.
So high retention, people using multiple services, that sounds like a sticky platform.
That seems to be the goal, yeah. Build loyalty, increase the value per customer, and their tech infrastructure is built to scale efficiently as they grow.
Okay, let's break down the revenue and margins a bit more. You said GLP-1s were a big driver in 2024, but how did it split out?
Right. So in 2024, GLP-1 weight loss brought in about $225 million.
Okay, and the rest, the core stuff.
The non-GLP-1 products, sexual health, dermatology, mental health, etc., that was much larger, about $1.2 billion.
So the core business is still the foundation.
Very much so. And online sales were the vast majority, $1.44 billion versus only about $38 million from wholesale.
And going forward, GLP-1s will grow, but the core remains dominant.
That's the projection. GLP-1 revenue might triple to maybe $725 million in 2025, not even counting compounded stuff. But the non-GLP-1 business is also growing strongly and will still be the bigger piece overall. Online sales will continue to dominate.
Got it. And the margins, you said overall was 77% in Q4 24, down a bit.
Right, down from 83% the year before. And that dip was really linked to scaling up those GLP-1s, which just cost more to acquire than some of their older core generics.
So GLP-1s have lower gross margins currently.
Generally, yes, compared to their established lines like sexual health or hair loss, which historically had very high margins.
So it's a mix shift thing impacting the overall margin percentage.
Exactly. The GLP-1s are growing fast and pulling the average down slightly, but those high-margin core products are still vital for overall profitability. They provide a really strong base.
Okay, that makes sense. Let's circle back to the Novo Nordisk partnership then. What are the bigger picture long-term goals there?
Well, beyond just selling Wegovy, it seems to be about several things. Expanding access and making these treatments more affordable, even at $599 compared to maybe uninsured retail prices.
Right.
Building a scalable, tech-driven model for chronic care, improving long-term health outcomes, not just selling pills, integrating that support structure we talked about.
Setting the stage for more chronic diseases.
Yeah, potentially. And just generally trying to make quality care more accessible and maybe bend the cost curve a bit.
So ambitions beyond weight loss specifically.
It seems so. There's talk about potential future programs for things like diabetes or hypertension.
Interesting. And maybe even partnerships with employers.
That's another potential avenue,
Yeah.
Offering their platform as an employer benefit to help manage workforce health costs.
Of course, with all this growth, there must be risks or potential headwinds.
Always. Regulatory scrutiny is a constant possibility in telehealth, especially around prescribing practices and marketing.
And competition.
For sure. It's a hot market, lots of players vying for customers, which could put pressure on pricing or growth eventually.
Okay. One last thing on partnerships. What about Ozempic? It's also Novo Nordisk, also Semaglutide. Any chance of a similar deal there?
It's more complicated, I think. Ozempic is primarily for type 2 diabetes.
And often covered by insurance for that, right?
Mm.
Unlike Wegovy for weight loss sometimes.
Exactly. So the cash pay model might be less appealing for Ozempic patients who have insurance coverage. Plus, regulations around promoting diabetes drugs, potentially off-label for weight loss, are stricter.
So more hurdles there.
Yeah, and Novo might be prioritizing Wegovy supply and competition right now. You could imagine synergies for patients with both obesity and diabetes, but insurance billing gets tricky.
And Eli Lilly is strong in diabetes too with Mounjaro.
Right, so while you can't rule it out completely, an Ozempic partnership seems less likely, or at least less imminent, than the Wegovy one we're seeing play out.
Okay, that provides good context. So, wrapping this up, it's been a really thorough look at Hims and Hers.
Yeah, I mean, the key takeaways are clear. Strong growth fueled by that DTC subscription model.
And this recent Wegovy partnership is a really significant shift, right, towards branded, FDA-approved drugs.
Definitely. It signals a strategic evolution, maybe opening doors for managing other chronic conditions later on.
But as they grow so fast, keeping that balance between expansion and, ethical practices and patient safety is going to be crucial.
Absolutely critical. That's essential for long-term success and maintaining trust.
It really highlights how dynamic this whole telehealth space is, and Hims and Hers is certainly playing a big role in trying to change how people access healthcare. Gives you a lot to think about regarding the future of the market.
For sure.
Well, thanks for sharing all that insight today. And for you listening, if you found this deep dive helpful, please do subscribe to Stock Explorers, give us a like, and hit that notification bell so you don't miss our next market exploration.